With this paper, what we seek to do was to propose to African governments to sort of shift focus from traditional bonds to issuing diaspora bonds. And the departures or the motivation for these proposals are in the current conditions of African countries, especially given the economic and governance conditions. Now, I'll just talk you through a bit of the conditions, but as the conversation progresses, I would give you even a more clearer definition of a diaspora bond. It's a patriotic bond, but like I said, I would give you a more clearer definition as we go forward. Now, the African Monetary Corporation is generally responsible for guiding the sub-region into a single currency and, of course, maintaining a single central bank. And they have provided a threshold for African states to be able to meet those targets. And they've said that for every African state to meet these targets, they have to have a debt to GDP ratio of 60%. But given the current conditions, about 19 countries have already exceeded this threshold. And again, the IMF has its proposed thresholds, which is 55% GDP, debt to GDP. And about 24 African countries, in that case, about 44% of African countries have already exceeded this threshold. And what that means is that it's actually providing a condition that is signaling debt crisis. And of course, later in about 2013, people like Stiglitz had to comment and say, look, these countries are simply building another grounds for another financial crisis. So this has become a serious concern for financial markets, and investors are beginning to see the signals and saying, look, the conditions are not good, they are not the right people to lend to. But at the same time, Africa has a huge infrastructural deficit. To cover this infrastructural deficit, it's estimated that between 2002 to 2009 to 2020, they should be spending about 93 billion annually to be able to cover this infrastructure gap. At the moment, they are spending 48 billion. Therefore, there is a huge gap that they have to fill to be able to achieve this infrastructural improvement. But the question is, like I provided earlier, the conditions of African governments are not very good. And this is actually reflecting in the way their bonds or their traditional bonds behave. So the traditional source of issuing traditional bonds are not favorable for African governments. Then also bilateral donor remittances are declining. And of course, since 2015 to date, they've declined on the average 5% every year. So these are major sources of funding for African governments, and these sources of funding are actually drying. So we thought we should look for some avenues of excitement, sort of to be able to bridge this gap and to improve these infrastructural deficits. Now, one area that has come to mind, and of course that is sort of exciting, is the remittances from the diaspora. And we realized that in 2008, during the financial crisis, the diaspora around the world remitted about 336 billion, even in the course of this financial crisis. Now, remittances are still on the increase, about 10% annually, and that is even equivalent to about 2.5% of the gross national domestic income of developing countries. So we think this is an exciting avenue, and just last week, the Financial Times on Thursday described remittance as the hidden engine of globalization. So we think it's an exciting time, and holding this discussion to begin to see how we can harness these sources of remittances and to bring them into financial markets is very important. So we started asking ourselves, how do we begin to tap into these sources of remittances so that African governments can rely on them as opposed to their traditional avenues of funding, which is beginning to dry. Now, one of the areas we realized was the issue of diaspora bonds. What diaspora bonds does is, the concept of traditional bonds, they support diaspora bonds. It's just that they have unique characteristics. So diaspora bonds can be issued by a country to its overseas citizens. But what it does is that it's a non-rated bond. It's also a bond that is issued at a discount. And purely the people from that country invest in that bond due to their patriotism to that bond. And there are examples around the world that have successfully used this bond. And Israel in particular is a very interesting case. Since 1951, Israel has been issuing diaspora bonds and has been very successful. You wouldn't necessarily hear them say diaspora bond in the context of Israel, but often they refer to it as the Development Cooperation Bond of Israel. So it's something they've issued a lot of times. And again, in 1991, India issued the Indian Development Bond during their financial crisis. So this is a bond that is often used during crisis situations, and it's worked for other countries. Recently, Nigeria issued it in the case of Africa, and it was successful. They were able to raise about $300 million US. Ethiopia has issued it. It failed the first time, but succeeded the second time. So as we go forward, I would also provide you with other countries that have issued. Now, like I said, since 1951, to date, Israel and India alone have been able to raise $40 billion out of the issuance of diaspora bonds. Now, these are some of the examples of the events of diaspora bonds issuance that we have come across. It's not a very popular instrument. It's not been issued within a very wide scope. So what we did in terms of our approach to understand what factors would influence the success of these bonds. Say, for instance, if a country was to issue the bond, what would make it successful? So what we did was to take the success cases and to take the failure cases. And what we did was to look for a methodology that would enable us to separate the success from failure cases. So in that case, if we were able to separate success case characteristics and failure case characteristics by countries, then we are able to say that, okay, if country A in Africa, if their characteristics is looking at, for example, like Israel, that often succeed when they issue it, then we say at that particular point, if that country issues, their bond will also succeed. If, for instance, in the case of Ethiopia, when they failed at first, if we pick their characteristics and any other country in Africa issuing it has similar characteristics, we say it would what? It would definitely fail. That is what we did. And we followed the linear discriminant approach to determine that. But basically, this is an approach that has been used in predicting financial crisis, in predicting bankruptcies for firms, etc. So we thought we should use this to predict the success and failure factors of African countries that would issue diaspora bonds, and of course, to propose to them to issue the diaspora bonds. So we generally, from the literature, started to look at what factors would traditionally influence the performance of bonds. So we looked at various economic factors, and as much as possible, we looked at governance factors. So what we did was we achieved 5 economic factors, and we achieved also 10 governance factors. But we also looked at the literature to also abreast ourselves and to inform our arguments in terms of what motivates the diasporian to invest in their countries. And largely, like I said, it's patriotism. You want your country to be safe, you want to build reputation among your people within the community, you want some level of significance for your country. So by that extension, you want to what? You want to invest in those diaspora bonds. So what I would just do is I would just quickly give you a snapshot due to the time of how we reach these analysis. Now, what we first thought was to estimate the diaspora savings. And we simply did this by restating the and his other colleagues how they calculated diaspora savings in 2014. They are actually not a lot of papers, so we had to rely on a World Bank paper and a Commonwealth Secretariat paper on estimating diaspora savings. So what we simply did was to look at the diaspora income, then we multiply it by the savings rate in the destination country. And there was an approach that we followed to look at the diaspora income. So generally with the diaspora income, we looked at for every diasporian in a country, what is the income and what is the stock or the diaspora population in that particular country. So that gave us the ability to be able to determine the diaspora income. But of course, we also had to adjust for the various skill levels between the indigenous people in the host country and also the diasporians in that country. And of course, we further went to adjust for the various skills levels within even the diasporians. And that was how we reached the diaspora savings, because that is very important. You have to know the amount of money there to be able to determine whether there's the need even to issue the bond or not to issue. So that was the first level of estimation, after which we then came up with the linear discriminant approach, where we then deployed those 5 economic and 5 governance factors, which we then refer to as our vectors. So after which, what we then did was to carry a binary variable, and the relationship between the vector and the binary variable would then tell us whether the bond would succeed or not. So for instance, if the bond was going to succeed, which is why we say 1, if the bond is failing, we say 0. But it has to be the relationship between, for example, inflation, which is an economic factor, against the Y. That would then tell whether it's going to succeed or is going to fail. So in actual sense, the threshold we then reached was that if the probability of a bond succeeding, given the particular variable, to the bond failing is greater than 1, then we say the bond will succeed. If it is the opposite, then we say the bond would fail. So these were the countries from which we collected our data. Some of the countries were the countries that have issued, and these were generally the destination countries that we looked at. And this was because we realized that a lot of the African countries, given their history of empire, tend to move to where countries that have colonized them before. So that is why we focus on some of these countries in Europe. But of course, United States is a very big market. So it was also another country we had to add in the process to train our data. And these were the results that we got in terms of the savings. In North Africa, Morocco tend to have a lot of savings. And generally, looking at the scenarios for the savings, the population or the diaspora stock tend to drive up the level of savings. So this was what we got for the savings. And for the purposes of time, I would quickly move down to how we then analyze the various success and other failure variables. So these were the variables that we looked at to see how they could motivate or influence the diaspora to invest in these bonds. Now we realized that regulatory quality was the most influential factor in determining the success of the bond. Then inflation became second, and government effectiveness, of course, was also the third most important variable. So what we then did was to take these 3 variables and then to apply them to the countries that have not issued the diaspora bonds, and to see which countries were going to succeed and which countries were going to fail. So if you see in the case of, for example, Burundi and Madagascar, they failed largely because their regulatory quality was not impressive. If you take the case of Tanzania and Zambia, they had a very good regulatory quality. So the diaspora bond in that context tend to succeed. That is how we worked through all the countries. And if you take the case of North Africa, even though they had huge savings, their diaspora wouldn't invest in the bonds. So generally, it was down to their inflation, poor regulatory settings, and also lack of government effectiveness that caused most of these bonds within that region to fail. So straight away, I come to the conclusion. I don't have much time left, and the recommendations that we actually reached was that for African countries to look at issuing diaspora bonds, they have to look into improving their regulatory qualities. In terms of regulatory quality, you have to look at formulating sound policies and also promoting private sector development. Inflation, of course, is something that was also a very important factor that we thought these states, if they were looking at sort of issuing diaspora bonds, have to be looking at. And the last one was, of course, which is the third one in terms of our ranking of significance, was the government effectiveness. That governments within these countries have to be very effective. In terms of their policies, they have to devise policies that are key and important to the country, and also their credibility to implement these policies have to be very strong to improve their governance effectiveness. And given the evidence or given the level of data that we achieved, if that was done, then the diaspora bonds would succeed if they issued. Thank you very much for listening. This time I would leave for questions.
Thank you.